Good morning, everybody. Welcome to the Steps to Soul podcast. Today, we're going to talk about financing for business sales. If you're a buyer, you're going to want to tune in. This is going to be very important to you. And if you're a seller, this is just as important because any buyer, most likely, is going to need financing to buy your business. With my co host, Chris Sater, I'm Brandon Bourgeois. Let's dive right in. Chris, there's tons of ways to finance a business. I guess the one everybody thinks is the most common is the conventional bank financing. Why don't you start off with that?
Yeah, absolutely. I've got a lot of buyers when they come to the deal that they feel like they're going to go to their local bank that they've done business with for however long, and they feel like they can go to them and get a loan from the bank. And that's a I've found out over the years that that's a really tough thing to do. Even when you know your banker, you've got that relationship with the bank. It all comes down to one thing, right? It comes down to collateral. Yeah, you've got
Mm-hmm.
your credit score, but even if you've got a great credit score and you've got your house and cars and all that stuff, comes down to collateral with these local banks. They most for the most part, unless they're going to go SBA route, but to keep it internal as a local bank, they're going to want full coverage of collateral. And I find most often that that doesn't usually work.
And for you guys out there, he means no blue sky. That's
Yeah.
the value over the value of the assets. And very often people think, oh, well, I go to a bank to buy a house, right? You go get a loan, the bank does an appraisal on the home, snip, snip, done. That's not the case for a business. Banks traditionally are scared of making conventional loans to buy a business, especially with blue sky. Very rarely will they deal with a fully asset collateralized loan for a deal. Perhaps yes. But even then, they're very scared to do it. And often they don't want to tell their customer, Chris, that they don't want to do the loan because they don't want to lose your deposits. So they'll tell you, and unfortunately, they'll waste 2 or 3 months of your time and you'll lose a deal because of it as a buyer and as a seller. So, one thing I can tell you about is even if your bank can do a conventional or has an SBA loan department, we'll get in the SBA financing a little later, but make sure they're a preferred lender because they have to go through the local SBA office. It's going to be a heck of a long road and a heck of a lot harder. So, if you're considering conventional financing, weigh these options because the bank's going to want prime credit, fully collateralized loan, as you said, and on top of that, it's probably not going to happen. So, would recommend you write that idea out of your head. Don't worry about that. Just don't bother. I've maybe in my career seen 4 or 5 conventional loans on the 800 that 800 deals that we've done. That's like a fully bank collateralized loan. That was it. The most
Yeah.
common form we see is seller financing. Let's be honest. That's the most reasonable way to do it, besides SBA.
Yeah. I met with a banker earlier this week. He reached out to me on LinkedIn, local banker here. I just wanted to, handshake and see if he could help me do my deals with
Mm-hmm.
their bank. And sat down with him. First thing out of my mouth is like, How do you handle blue sky?" And he went immediately to, "Well, yeah, we have an SBA department." Okay, what does your SBA department even look like? Well, it's 2 to 3 guys, and they go back and forth between conventional loans and SBA. You and I both know that's going to be a nightmare, right?
It
These are
is.
guys not doing SBA deals all day. Nothing against that bank; they've got their bread and butter. They know what works for them. Congratulations, you figured out how to make money in a local market, and you've been around for 100 years. That's great. But if a buyer comes along and you're going to try to figure out SBA financing for the first time in a couple months, you don't have a pipeline. It's going to be painful for everybody. It's going to be painful for the buyer, for the seller, for the brokers, everybody involved, because you're basically, if you're not SBA preferred, you're having to get the SBA's approval on everything, right?
Mm-hmm.
But now you're also kind of figuring it out yourself because it's been a few months or 6 months since you've done an SBA deal. The process has probably changed with the SBA in that amount of time, right? They've got some new guidelines. They keep coming out with those. You've now the bank has to learn those. So just a painful process if you're not dealing directly with a SBA preferred lender that only does SBA loans. Is That's kind of my take on that.
You're absolutely correct. And I would say too, a big issue is the legal part. Yeah, you may catch up on the guidelines, but the underwriting and the legal back end where the bank has to prove the paperwork, that's where it can be even harder. Because if you don't know what SBA is going to require and you're going through 17 drafts, it's taking time, money. It's typically a disaster. We had a nice young lady wanted to use her bank to buy a daycare. And she wanted to use her bank's SBA department. Oh, yeah, we can handle it. We can rubber stamp it. I'm sure you've heard that too, Chris.
Oh yeah.
6 months later, it barely got done, and it was a disaster. It
Yep.
just it was it, if they had used a preferred SBA lender, it'd have been half the time, been a lot more efficient, and been done through the door. But that's okay. And there's nothing against local conventional banks. We have good relationships with them. It's just they don't always work well with business sales, especially just like, for example, a lease space, right? If you've got, real estate involved, they're a little more flexible, but not that much more.
Yeah.
They like hard assets. That's what they do. And that's why a lot of times we pivot to seller financing. If you don't go SBA route, the next best option is seller financing, especially if we've talked about previously. You're not reporting the cash. There's some financial issues, or just you want to have some tax benefits as a seller, or as a buyer, you want that owner tied into the business longer. And how does seller financing work? Obviously, you need some form of a down payment, right? You can't just do an earn out. Those videos you see on Instagram, folks, where you just take the business over and pay out the proceeds forever, that's not realistic. Especially if there's asset value in the business. Say it's $1 million deal and there's over $400,000 in assets. Why would I give you it for free when I could get $400,000 for the assets? Right? That doesn't make sense. But a down payment to cover the asset value in most cases, with a proper note structured, whether a balloon at the end or not, is a great way to get your business sold. It opens the buyer pool up and allows you to get a better price sometimes, and the interest payments and deferred tax benefits.
Yeah, absolutely. Let's talk about how much seller financing should be in a deal. Obviously, the seller wants, a lot of times in my deals, they want zero. That's not really realistic. Even if the buyer is willing to not have any seller financing, what I find typically happens is the bank comes along and they just want to feel warm and fuzzy about the deal. So what's the first thing they're going to do to make that happen? They're going to say, Mr. Seller, Mrs. Seller, we want you to hang on to at least a small amount to make sure that you believe this deal is a viable deal. It's gonna produce cash flow for the buyer, and you're going to be around for what my average is, what, 2 years, full
standby.
Full standby. Thank you.
Mm-hmm.
full standby. Yeah. And I think that gives the bank that warm and fuzzy feeling they're looking for, that you believe, hey, even if it's 5 or 10, 20%, 20% is kind of high, but seller is going to hold on to that much. And that makes the bank feel like this is a good deal. We can move forward. What's your kind of take on that?
Banks love knowing that there's going to be some kind of ownership involvement down the road to make sure that new buyer is stable, whether it's customer retention, training, a specialty license, et cetera. We could go down the criteria that banks like to see. What's important about that seller finance is the bank has confidence, like you said, the seller will be involved. And the person who ran his business for, let's say, 20 years is going to make sure he wants to get his payment too, right? That's fundamental. It's human nature. You want to make sure you get paid what you're owed. And with the new SBA regulations now incorporating seller finance, or just a straight seller finance loan in general, that seller has a vested interest, and it gives confidence to a deal. All deals get done when there's confidence and trust. And trust and confidence drive deals forward. And I know I've kind of gone forwards and backwards on that same statement, but they both matter. And when someone's willing to seller finance, it shows I believe in you, you believe in me, and we're going to make sure this works. And when you have that support, and it's not, the debt service isn't crippling the business, it allows deals to get done. And we've had a lot of sellers that, look, hey, I would love to seller finance because I'm saving on taxes. I don't want to pay capital gains on, let's say, 500,000 flat. I'd love to get 300 and get a nice note down the road, paying me some extra money, some residual income that allows me tax-wise better, but two, kind of gives me a kind of an income to live off of if I'm quote unquote retiring or doing another project or another startup. And also if you have a non-compete, you as a buyer saying this is great, he's still involved and I have a non-compete on top of that. This seller finance kind of protects me and my industry and my investment I just made. Because imagine spending $1 million, you don't have, you say you have a non-compete, no, you say you don't, but that seller finance is going to tie you to that seller to you permanently for a long time, and that's going to help you to grow the business, sustain the business, and get a return on your investment, which is what's most important. You're not buying something to fail. You're not buying something to lose money at. You're buying something to make money and have a better quality of life.
Yeah, absolutely. And I mean, sellers can feel pretty good about seller financing a little bit, because what they can do to protect themselves, and their attorneys would advise them as well, is get that personal guarantee on the note, right?
Very common.
You're going to fall behind the SBA bank or any other financing that's in place. You're not going to be in first position. That's a guarantee. but at least you've got some kind of guarantee on there. The buyer is going to know that his name's on the dotted line, and he really needs to perform and get that seller note paid back. And then you got some other points that you can negotiate during the deal. You can talk about, usually you're going to see that 2-year full standby, but how long you're paid after that. Sometimes, I think in my past couple of deals, it's been a 10-year amortization, and then a balloon note due at the end of 5 years. So it's not like it's going to last forever. It may be smaller payments than a 5 year amortization schedule, but that's really to benefit the buyer and make sure that they are going to stay in business, and it helps them ensure that they're going to pay the seller back, right? Because they're less cash out of their pocket for the first, especially first 2 years.
Yep.
And
Debt
3 years
service is
after
easier.
that, yeah, the
Hmm.
3 years after that, yeah, they're making some payments, some P&I payments, but it's based on a 10-year note and not a more compressed 5 year note. So I know that that really helps the buyers.
I'd add too, in these difficult times of interest rates, that could be a lot. That could be a big difference when the SBA is at 10% sometimes. That extra bit you're saving on that seller note could be a difference between making a good return or scraping by. So it gives people time to get established. We've all taken on new jobs, new responsibilities. You still need time to adapt to every new situation. Maybe it's an industry, the same industry acquisition, HVAC to HVAC, and you know the HVAC business, but you still don't know this exact business, all the personnel, all their characteristics, integration of systems. That time and balance to give you, that's crucial. And I think when sellers finally realize that, when you help them to see from a buyer's perspective and vice versa, it's a good deal. Not every deal is about getting your top dollar. You'd like to get your top dollar, and that's the goal. But like we go back to what I said earlier, a balanced deal that works for both parties ensures the deal goes down there and continues into the future. If you look at it as get your money and run, good luck. Cash deals are few and far between, right? I mean, how many do we really see are all cash? Very, very rare.
Yeah.
So it's very important to build in structure and build in trust that facilitates a deal for both parties, because that's what both parties want. They may not want to admit it to themselves, but internally, that's what's best for you. And very often, that's the way to get there and hold everybody accountable.
Let's talk about that number you just threw out there, or a number. When do you typically see seller financing kick in? Because some of my lower deals, $400,000 or $500,000, there's been no seller financing involved.
Mm-hmm.
It's that's pretty much it is a cash. But I think once you get close to $1 million, $2 million and above, you're going to see that, especially when the bank gets involved, SBA bank or any type
Yes,
of. I'm going to see seller financing. How about you? How about you?
I see it all the time. And I think what it does as sellers, you have to remember this too. It opens up your buyer pool because you can apply that seller finance towards the buyer equity injection, the typical 10% down the buyer needs. You can apply some of that seller finance towards the equity injection. So that can help increase your buyer pool to find more people to buy your business. Maybe you've got two candidates. One that has got 10%, no problems down. You kind of like the candidate, Chris. You're sitting there debating two offers.
Right.
The other guy you really love, you think he's great. He's a little bit younger, but he's been in the industry. He's aggressive. You know he can run this company. But if you help seller finance, let's say 2.5% of that 10% down for your seller equity injection, that's a deal you want to take. That helps you do it.
Yeah.
Why would you not do that? Why would you take the deal you don't love versus a deal you could have? Yes,
Yeah.
it may be some more seller financing, but it gets you the better candidate for the better training and transition period and somebody who's never been in your industry, who's going to want to learn, obviously want to learn everything you know, but they're going to make it harder for you because they're going to ask you dumb questions. They're going to ask you silly questions. They're going to ask you questions. And probably, although you want to get paid for your business, are you really 100% sure this person's going to be a great fit in 5 years for it, right?
Right.
Versus this other person who's been in the industry, maybe not as affluent money-wise, but man, this guy can run it. I know he can run it and it'll be here in 20 years if I sell to him. That's a benefit of using seller finance to get a better deal for you, both emotionally, financially, and for your employees, your workers.
Yeah. Absolutely. Let's keep moving. Talk to me about earnouts. I'm going to be honest with you. I don't think I'm thinking back through all my deals. I don't think I've done a deal with earnouts. Have you had one of those? And what's kind of your
Yes, we've done
yeah,
one. We've done
right.
one that I know of, and it was a very rare situation. It was for a radio station that a guy had in a small town that was, look, he just wanted to get rid of it. He was so done. He was never there. It was an old station, and this lady wanted to buy it. And she told him, look, I don't have a lot of money, barely any, but I want to play gospel music. I want to run it through a charity, and I want to raise money for my local church. And he said, if that's the case, I'll fully seller finance it. But you got to guarantee it and sign on. But in this case, because you're going to do the Lord's work, I'll do it. That's the only time. And it was only like $170,000. It was not like we're talking $1 million business here, people. Like, no.
Right.
And this guy was like in his 80s. He's like, whatever happens, it goes to my estate, so who cares, right? He's like,
Sure.
I just don't want to deal with this anymore. That's the only time I've ever seen it. But these videos out there telling people you can do that. And look, yes, full disclosure, anybody out there listening, You can, in theory, do an SBA loan with no money down if the seller equity injects 10%. But let me make something clear. Banks want skin in the game. And if you're not willing to do that, good luck finding a lender. In theory, on paper, yes, you can. But don't forget, as we said this many times, and we'll cover it in SBA below, the SBA insures a loan. They don't issue it. The banks issue the loan. So they want skin in the game. And honestly, why earnouts don't work too, Chris, and why we never see them and people who propose them, they don't make sense. If I've got $1 million business with $500,000 in assets, why would I give you those assets for free for you to fail, take the assets and run and liquidate as a scam when I could just sell the assets and close and still have $500,000? Why get nothing for something I know I can get hard value for pretty easily?
Yeah.
That's why it doesn't work.
Yeah. Yeah. I've had a couple of buyers propose it. The seller stays on and the business has to hit the same revenue target it did before, and then in fact, I had one recently here in my hunting products. They started the LOI with that. It got quickly canceled out. That wasn't going to fly. But yeah, they wanted to basically the seller. They were only keeping him on for 60 days, but then after he's gone, he's responsible for the business doing the same thing that it had done for all these years in the growth, and it just that's not
That's a tough pill to swallow.
Yeah, that's not
Sorry.
feasible.
As a seller, you're not going to do that.
Yeah, he's got no say in the game. If he was going to stay on as a consultant and they were going to pay him a large salary and he was still responsible for running the business, I understand proposing it then, not saying it would still fly. But yeah, if he's going to be gone, what control does he have to make sure that the business continues running the same way it was?
Now, does that deal have any seller finance?
It does.
See, so there's the compromise, seller finance,
exactly,
just as we talked about earlier. Not to
Right.
go hash back on a topic, but again, I'm going to keep highlighting that for everybody listening. It's important. Please keep it in mind.
Yeah. That one's got some seller financing, got some certain deal points that we've talked about here through these things. But yeah, definitely not an earnout. That wasn't an option.
So let's talk about the most not profitable, but maybe the best way to get the best price, but also get the most financing, which is SBA financing.
Right.
Now, obviously, we recommend use a preferred lender who doesn't have to deal with the SBA, can issue the loan themselves. There's tons of them out there. Some have blue sky caps, some don't. We can give you advice on that. Call us if you have any questions. But how much have you seen SBA change the industry? Because in my opinion, it's been a game changer, and I think in the future, if we can, with the new regulations opening up more and more different ways to do transactions, this is going to be the wave of the future. Especially if we can raise that SBA cap from 5 million to 8 million.
Yeah.
I see a massive change in the American economy if we can do that.
8 or even 10, because I've been bumping up against the ceiling on my past due two deals. Right at 5 million, and the buyer had to bring in a lot of cash just to make the 5 million work.
And I'll tell you, I understand wanting to go to 10. My only concern there would be I don't want private equity taking advantage of the SBA program to stretch their dollars further. The SBA program is really for small business owners to do deals, not for large equity groups to take cash and then go in and get loans and use that as leverage. Not that I'm against private equity taking loans out. I'm not against that. But man, how many deals are we seeing now where cash flows are $1 million EBITDA, where that $5 million threshold is tough, especially if we have valuable real estate involved, especially if it's all blue sky. We have some banks that have $1 million, $1.5 million blue sky cap. We have some that don't, but that limits your field to pick from. And it's tough.
Yeah, no, absolutely.
We had a swimming pool company we sold for $4 million. We didn't do the property with it because it would have been pushing over the cap. Now you can do some additional loans on top that banks will do, but it stretches it and it's tough. It just is.
Let's talk about, why SBA financing with a preferred lender versus that local bank that just says they're SBA, they do SBA loans. What is the difference between the preferred lender? Why did they have this access to do these loans without the SBA authority? What have they proven in the past that they have this availability to do that?
Well, they've been screened by the SBA. They've been approved, and they've gone through, I guess, an SBA underwriting process where the SBA says, you know how to do everything properly. Your legal department's prepared. Your underwriting department's prepared. You have the criteria. You can rubber stamp deals. Now, it doesn't mean the SBA is not going to audit them. That doesn't mean the SBA is not going to have it a say every now and then, but it allows these lenders to move efficiently. And look, what government bureaucrat wants to handle all the loans that we do, Chris? Come on. I mean, they don't want that working. They want a conventional bank or a fintech bank to do this. That's what that bank does every day. The SBA does not want to get in the business of issuing loans.
Yep.
They want to help set the guidelines to help banks do loans and insure them so banks are confident. And for those who don't know, the SBA insures 80% of the value. That's why the bank wants 10% down and only that 10% window. And often they'll also have a life insurance policy to help cover the difference of the uninsured portion, which if you do an SBA loan as a buyer, you'll learn you have to have that. But it allows the banks to get aggressive because we talked about they don't like what unsecured loans. Now they got a 20%, they got 80% insurance on the value of this loan from the SBA. They got 10% from you. They got life insurance policy to cover the other 10%. What do they have, Chris?
Yeah,
A fully collateralized loan.
yeah, exactly.
Now the paperwork's grueling. It's more than a conventional loan, and a downside to it is a little more expensive. It's normally 2 over prime at least. Maybe a little bit low if you're lucky, maybe a little bit higher depending on the bank and the risk tolerance. But you're going to get a deal done. Would you rather spend 2% more and get a deal done or go to a conventional bank? You know, I've got a great story for you. That pool company I just referenced, the buyer wanted to use his bank. He tried another bank he wanted. Conventional loans, guess what happened? They didn't get done.
Right.
Bank wouldn't do it. Finally, he went to our preferred SBA lender who has a no blue sky cap. You know what happened? Can you guess?
Yeah.
It got done. It got done.
Well, and then you and I, not to give you a heartburn or drudge up the past, but we have experience with a buyer who wanted to use an SBA bank. He told us, I believe he told us it was an SBA bank, or maybe it was a local bank, but they did SBA loans, but it was not a preferred lender, right? And how long did that one take to get through the process? What were, 9 months, I think?
We're not going to talk about PTSD. I'm good. It was too long, far too long.
Are you still in therapy over that one?
No, but I use it as a prime example when I tell people choosing a bank is important. And look, the bank got the deal done. Let's give them credit for getting it done, right?
Right.
It was a tough deal, and I don't begrudge anybody for working through that. But I will say, picking your lender is important. And please, when we say we recommend good people, we're not doing it because we want to get a sale done. We're doing it because we know this bank can do it.
Yeah.
Not all banks are equal. Not all lenders are equal.
Yep.
And having a lender that's done a lot of deals with us, myself, yourself, our other outline offices that are a part of our team, they have trust when we send them a deal. We're sending them a deal they know they can finance. They're not going to be wasting hours of their time. And that's important too, having those relationships. Yes, you have a relationship with your conventional bank here in town. I'm sure they're a good bank. But they don't do SBA loans, and I don't want to tell you no. So please, I know SBA can seem like a lot, but it's worth it. And one thing we didn't highlight that I think is important, maybe we said this previously, but on other episodes, but I think we want to highlight this too. When real estate is involved and it's greater than 51%, we get a 25-year amortization on the whole project. Typically, if the business value is more than 51% or just a straight business loan, it's a 10-year amortization. So with seller financing in that 25-year AM, you can really get that debt service down and really allow you to make some good money. This is common in auto shops we see in other big real estate-based businesses, and it's great. It opens up your buyer pool. And you could do it with a conventional loan. They would never do that for you. You'll never get those terms. Yes, the rate's a little higher, but you'll never get those terms. And that's why you use a good SBA preferred lender.
Yeah, and anybody can go to, I believe it's the SBA website, do a Google search.
Mm-hmm.
Look for the top 100 SBA lenders for 2024 or 2023 even. And then I'd probably pick one from the top 20. I'd probably pick 2 or 3. It doesn't hurt anything to reach out to them and start the process, get a term sheet from them. They don't
get pre-qualified even as a buyer.
Yeah, they will pre-qualify you as a buyer to make sure what you can do, what you can't do. But take 3 of the top 20, do some research on them and reach out to them. And, the only time they charge you is when they're getting farther along in the process and you're telling them you're ready to move forward after an LOI. They'll ask you for a deposit, I guess, $5,000, $10,000, whatever the case may be, sometimes more probably. But yeah, it's free research to do that up front.
And I will say some banks have a different risk tolerance and preferred spectrum of industries they want to work in. So don't be offended if one bank says no. I've had one of the, if not the largest SBA lender in the country, deny some deals that we had. They said, that's not what we want to do.
Yeah. Okay,
that's fine. I'll go somewhere else. And we got them done right away. Every bank is different. Some have different specifications. Some have specialty niche projects they love. There is no one perfect lender. So keep that in mind too.
Yeah, and they all have their industries that they try to avoid, right? I know mine that I usually go to, they don't do trampoline parks.
Yes.
Another one might not do gas station convenience stores for whatever reason. They've gotten burned too many times by
hotels,
that industry.
auto shops. A
Yep.
lot of stuff with phase one environmental, some banks just don't want to touch. And that's okay. We can find you somebody who will. Trust me, we've got a bunch.
Yeah. Yep.
And that's good. And it's okay to shop around to get a better prime rate. We understand that. We take no offense in not using our bank. We just ask that if you choose another bank, have a good one picked out and let us work with the lender. Because if we can work with the lender to get more things executed, we can speed up the process.
Yeah.
And that's what you want.
For sure.
And that's the one downside of SBA. It is a longer process. It is. And one thing I'll add too about financing that we didn't mention in any of these comments, I can't believe we forgot to say. No bank is going to do a deal till you have an offer and acceptance or an LOI agreed to in place. They will tell you yes 100 times out of 100, but they will never take a step forward till you have a deal agreed to in principle in writing. So always keep that in mind. I've seen conventional banks. I would love to do that deal for you. No problem. You finally bring them the offer signed. Well, even now we can start the process, but no,
Right.
you've got to have those offers signed. It's critical.
Right. Yep. Walk me through a real world scenario of just the ideal. You got. Let's take the SBA limits to the max. You got a $5 million deal in place. What
Mm-hmm.
does the buyer need to bring in? What should a seller expect? What's the kind of the outlay of that look like?
All right. So typically you have 10% down. So if you've got a $5 million business, you're probably doing EBITDA of what, 1 million to 1.5, give or take, maybe a little bit higher, depending on the industry and the multiple you get.
Yeah, the risk
So
and
you
all
need
that stuff.
$500,000 down for 10%. That's of the 5 million acquisition price. So you're putting $500,000 down and you're going to, let's say after debt service, you're still cash flowing around 1 million to 800. If you're doing $1 million acquisition, 1 million EBITDA. If it's 1.5, you're probably doing a 1.1 to 1.2 million EBITDA on a $500,000 investment. That's incredible. Now the bank may say, hey, look, this is a big transaction. Mr. Seller, you've been here 40 years. This guy coming in is 40 years old. Great experience, but this is $5 million here. Can you seller finance, let's say, 2.5%? I can't run those numbers in my head. Excuse me, I'm not a math genius. But could you do two? Let's do that. So let's do this real quick. I'll run my calculator. So forgive me, screen. I'm not looking at you. 2.5% of $5 million. If you could do it in your head before me, I am jealous. That's $125,000. Does that sound correct to you? Yeah, $125,000. So $125,000 all you got to seller finance to help that seller equity injection, and you're going to get paid $5 million. Can you hold off that much for 2 years? I think you can.
Well, and it earns interest, right? It's not just sitting there.
And principal, yeah, if it's a full standby, absolutely.
Yeah, it's
Earns
earning interest
interest, and then
for
you
those
start.
2 years, and
Mm-hmm.
so when the payments do start on month 25, you've built up all that interest, and now that's going to be amortized over the next 3 years. Now, some banks may have a different structure, so don't hold me to that. But yeah,
And every deal is
that in theory,
flexible. Keep that in
right?
mind. Every deal is flexible.
Yeah, absolutely.
No, and now look, there'll be some paperwork. You'll have to have stuff done. If we haven't said this before, have an accountant, have your books ready. If not, get one now. Start, because the SBA is going to ask a lot of questions. Verify income. That's necessary. But you took a buyer who maybe has worked hard his life, has 500 grand in savings, but that's maybe his max. Because don't forget, SBA has pretty high closing costs, and the SBA can also loan you working capital, loan on the closing costs, all at 10% down too. So you can really get even above that $5 million threshold. You may get a $5.5 million loan basically
Yeah,
for your working capital and your closing costs. You as a buyer, that is an incredible opportunity. And to go back to the pool company, the buyer's consultant told him for the amount you have to put down to get this deal, you will be crazy not to do it because it assimilates into a similar industry you're in. This is an add-on roll-up service you can provide. You would be nuts not to take this opportunity because you're looking at $1 million cash flow at a $4 million. It means less than $400,000 with a little bit of seller finance. Where else can you make that kind of money in return in an investment? Yes, you're going to have some work to do. Don't be naive about that. But you can't get that kind of return in the stock market. You can't do it in real estate.
right.
And that's an unrealized gain in real estate. You're sitting there. This is cash money going to your account. That's incredible. And that's why you see all these searchers coming out of the woodwork, guys in their 30s and 40s that we talk to all the time saying, I need to buy a business. And why do they want these? Let's talk about this, Chris. Why do those buyers want SBA loans and want businesses in that $600,000 to $800,000 cash flow range? I'm sure you can elaborate some
It's
more.
the greatest maximum value you can get. You're right under that $5 million threshold. It's probably the most bang for your buck for return on investment. I mean, you can't get that in Airbnbs or real estate. We're talking 35% return on investment, if my math works out correctly. Sometimes much more. So Yeah, they're looking to maximize cash flow, maximize what they can borrow from the federal government, maximize what they can get from any bank, really, and
Hmm.
that's the whole reason behind that.
And I'll add this too. There's room for debt service with the
Yeah,
SBA and a cash flow that strong. Can you imagine working a corporate job making 200 grand a year, which is pretty dang awesome for a lot of people? You go from making 200 grand to making 600 grand a year, and you
yeah,
control your destiny in something that can grow. And eventually one day you can sell for a bigger return.
sure.
It's a no brainer.
Yeah,
Heck, we both, I know you have an SBA loan for one of your deals that you own, and we've looked at doing one together as well. It's worth the risk. I,
yeah.
I can't get a better deal anywhere.
No, you really can. You got to believe in the business, got to believe in yourself. But at the
That's
end of the
right.
day, that if you believe you can make all those things work, and we're gonna hold pace with a good economy, that's probably the hardest thing to control is that you can't control that. But that's where the risk comes in. But everything else is something that you control, and the financials and the cash flow and everything like that. You can always go out and do some more selling.
And I'll add too, the SBA allows you to keep partial ownership and ownership equity rollover that a conventional loan probably wouldn't allow you to do. And I'll even add too, the SBA is going to want you to have a background. Let's be mindful. You can't be somebody off the street who's never owned a business or had any kind of management experience and expect the SBA just to hand you a loan, especially
Yeah,
for a larger amount. Certain industries, they require a lot of background. Restaurants are one, just for easy example. They want front of house, like true management experience or ownership. And not just 1 year, we're talking multiple years. So say you're a waiter, no. Chef, maybe. If not, you've got to have been a manager. And that's important.
right.
So that's another criteria. The SBA that's a little bit harder and conventional. But I can tell you, a bank, I would bet a lot of money that a conventional loan for an operating restaurant would not happen. Period. I was in a meeting just the other day with an accountant and a buyer and a seller, and me and me both kind of chuckled and said, "What a conventional loan?" I said, "He's like, they're not going to loan on a business. Now, if you want to put a X amount in collateral from your other assets,
Yeah,
yeah, sure, they'll leverage that,
yeah. If
but
you can
no,
back it
otherwise
up
they're
with
not going to loan on it. No.
Yeah, if you can back it up with equity in your house or CDs in the bank or something like that, that's you could just basically pay cash yourself, but you're borrowing money and they've got
Hmm.
full collateralization. That's the only time they'll do it that I've seen.
It's very rare.
Yep.
And we wish it wasn't, right? We do, because we'd love to get cheaper rates for our clients and we'd love to help people do more deals, but it's just not, that's not what their lending is.
Yeah, because the SBA has guarantee fees, right? That there's a huge cost up front.
Yes.
It can be smaller for lower amounts. I'm not sure if the $1 million is still in place where there's no guarantee fee, but for larger deals, they're gonna hit you pretty good with a guarantee fee. And if you went to
Yeah.
a traditional bank, they probably has some administrative costs, but it wouldn't be the
But nowhere
guarantee
near
fee.
that amount.
Yeah, but you just can't get it done with them.
Because for a while there was no fees under 1 million, and it was half under 2 million in
Yeah,
acquisition price, which is good for investors. Man, you're talking you could be saving 50, 60 grand in closing costs and fees.
right.
That's incredible.
Yeah,
That's money in your bottom line. Again, that's a savings you can't find anywhere. Now that probably will change, but and the SBA has to make money. They did that to help spur the economy on and maintain growth, which is good. But still, even then, you can loan on the closing costs. Just get there, get the cash flow, get a good deal done. Control your own destiny, as my father would say.
yeah,
Take calculated risk.
absolutely.
Did we miss anything? I think we hit all the stuff on the head pretty good.
You got everything I got.
That's what I got. Well, thank you everybody for listening. I'm Brandon Bourgeois. My co-host Chris. I'm with Sunbelt Business Burgers of Baton Rouge. Chris is with Sunbelt Business Burgers of Shreveport. I'll give you my contact information, 225-201-0202. Chris, hit him with your phone number.
318-525-7349.
We appreciate y'all for listening. And also, if you ever have questions, you're welcome to contact us. We're here to help. We do the most amount of volume in the Gulf South. So if you want to look into buy or sell a business and you're curious, we highly recommend you keep listening to the podcast, get more great information, and give us a call. Y'all have a good one.
Bye bye.